morning and welcome aboard. We're getting all set up here for the training morning. Welcome guests, welcome monthlies, and we have a number of intensives in. Thank you for that. This is Price Action Trading with Saul Shaul. Saul is a CME Group floor member. He is actively scalping the S&P 500 E-mini for his own account. He's also providing key information based on the S&P 500 E-mini intraday, particularly the morning session. He's giving you trading zones, key areas, specific prices that he's interested in based on his own trading. He lays out that information when he pops in pretty close to the cash open. Then we go through the morning session together based on your interaction with Saul and Saul's commentary. We've got a nice group of people in here on a daily basis. Appreciate it. Those that are coming in as guests, make sure you put up an S&P 500 E-mini chart. Hey, Biger, good morning. Hey, Don. Hey, Dove, Fred, Glenn. Hey, Jay, B. Welcome and good morning. Hey, James K. KG, Mark. Hey, Padro. Hey, Ramona, it looks like you're in twice. I'm not sure if that's on purpose. We do have individuals out there that come in with their phone or their iPad or their desktop. I just don't know if you're hearing me twice. Hey, Roop. Hey, Warren. You should see a series of 3 charts in a separate chart window, 2 time frames for the S&P 500 E-mini and a 30-year bond chart. If anybody needs any information on Saul's monthly, let me know. Just raise your hand and I'll send you out the info. You know, this is an opportunity for individuals to really focus and look to develop consistent profitability based on their trading plan. It's interesting because there's a lot of places you can spend your time out there based on the art of or the act of trading the S&P 500 E-mini. I can go over what the deliverables are and what the opportunities are based on this service. I think the first one, I sort of shift them around a little bit, but the first one I think is Saul. You know, depending on market action activity, there's certainly a lot to be said about having somebody who has seen it, been part of it, and still is part of it, be able to be a level hand during price movement, price change, and the action around price, which is the action around Saul's trading zones, his trading levels. So Saul's TikTok, and I'll describe Saul, what Saul does, and what you could do based on your interaction with him and the enhancement of your trading abilities based on your relationship with Saul. So it starts out right around the cash open. It's when Saul sets his proprietary scalping levels for this morning's trade. Right now it's 9:19 a.m. on March 3rd, 2021. Everything we do is for educational purposes only. Nothing is to be taken as direct trading advice. You're trading between you and your broker at your own risk. So Saul comes to his screens as a individual trader like yourselves. He's been doing this for 25 years or so. He's a CME Group floor member, which is a pretty big deal. If you're not familiar with the CME Group, look it up on Google. It was the area this all started and then branched out to the electronic, it was electronic on the floor. They opened up Globex. Now we're here based on the access that we have, the democratization of the markets, not only based on lower commissions, but access, and certainly the democratization of instant information that used to be pretty much held on by the big firms and the access to their institutional clients. So the S&P 500 E-mini is a instrument, an index that has price change during the day based on what's happening in the overall market. Represents the derivative of 500 individual stocks. That's why it's called the S&P, the Standard & Poor's 500. As the market ebbs and flows and the prices change both up and down, you have the opportunity to enter trades based on your platform and your order entry. What Sol has done for himself is he has figured out that based on a price action trading methodology, price action entries, exits, and stops, he has learned to develop key levels right around the cash open, which is coming up at 9:30 Eastern Time. He sets a pivot, a price, and other levels on top and bottom of that pivot. These become the areas of interest based on the opening bell and the morning session. Now, having said that, the market has its own personality. Things change. You need to adapt to that change based on what the market is giving you as the reality or the reality check after the cash open. So this service helps you, A, you receive Sol's zones and levels. He gives them out in audio to everybody right around the cash open. You go through the morning session so you see what the market is doing. You see how the levels are doing based on the first bars and the first part of the morning session. That can happen the first 15 minutes or so of the, after the opening bell. And then it's a matter of picking your spots based on those levels. And Sol goes through that when he pops in. So it's really a relationship with Sol, the, his ability to set key zones and areas for you to pay attention to, the adapting to those key areas and levels. I'll be right back. And then it's the rinse and repeat of that on a daily basis as you narrow down your focus and shed the stuff that's causing you distraction based on your standardized software package and all the other noise that's out there based on market movement, price change during this market morning, and then come back and do it again on Monday. So that's the opportunity. So guests are coming in. Welcome guests. We got monthlies popping in. Welcome monthlies. We've got those that are taking Sol's intensive. So welcome aboard. Hey Teresa, I reached out to you yesterday. Welcome back today. Be prepared to write down Sol's levels when he gives them out. Listen to how he opens up in the morning. Hey James K, welcome. James, have you been in before? Just let me know back in chat. Hey AN, good morning. HD. Hey, JB, let me know how you found us and what you're trading. Ramona, the same. I did mention you were in twice. Let me know if that's on purpose. Not sure if you're hearing my voice double or it's messing up on you. Should all see a series of 3 charts in a separate chart window. They're very simply represented. You know, if your charts are really complicated, you might want to strip everything out of them. Focus on Saul's zones and levels. Focus on his commentary. If you want to hear more about Saul's intensive, then join the family as a monthly. If you're interested, let us know. Just raise your hand and I'll send you out the info. I send it out in chat so that you have it right here. You know, we don't really deal too much in email. Find that very frustrating. I'll send it out to you now. It's at a nice discounted rate, so if you're inclined, then now is not a bad time. Makes you part of the family. We can have trading consultations, you know, all that stuff. Hey, Maureen, good morning. So, JB, that's out to you now. Let me know if you got it. Comes out to 25 bucks a week, you know, based on the discount, which is a great opportunity. And again, we like the idea of having guests come in. They generally transition into Sol's monthly. You know, once you become part of the family and you'd like to talk about Sol's intensive, then we can set that up for you. That's where Sol takes you under his wing and teaches you his trading, price action trading technique personally in private session. You know, there's a
All
lot that
right.
goes. Oh,
Good morning, everyone. Can you guys hear me all right? Thank you there, JB. I can't see your last name, so if JB is good, then hopefully that'll be good enough, and we can always talk about anything else. All right. Well, we talked about yesterday that Powell was going to be talking, having a big powwow, and he created the volatility yesterday afternoon that made that very big push here to the downside yesterday afternoon. As you can see, that hourly bar, good part of almost like 80 points, and then a continuation after that. So we did warn you that Powell was going to be talking, and that you know, anything could happen when he does. It's just like an F day, Fed day, and that's exactly what happened yesterday afternoon. As the market completely kind of fell out of bed a little bit because they did not. He didn't say what they wanted to hear. Then the unemployment number came out this morning. As you can see here, a little rotation back up to the upside. So we got a little merry-go-round thing going, getting us back into the range, yesterday's mid-range and yesterday's kind of value area. So we'll see where the day brings us. Again, we never know which way the markets are going to trade. We give levels here that I'm going to give out verbally, and we use them as a guide to the day. And then from there, we decide we make adjustments to those levels, and we also have price action opportunities that occur as well. So let's give you our levels for this morning. Our pivot this morning is 38.07. 38.07. I got resistance above at 17, 26, 34, 42, 53. Support below at 37.96, 37.96, 88, 80, 74, and 66. Pivot 07, support 37.96, 88, 80, 74, 66. Resistance on the upside at 17, 26, 34, 52, and 53. All right. Again, we give you our levels. This is how we kind of start our day, and then we go from there. We don't know which way the markets are going to go. We don't try to predict. We just take what the market gives us and trade the opportunities that might develop off of that, using these levels as a guide. Like I said, we can add, subtract to them. We can adjust them. These are not to be taken for sure, but because it's just the beginning. Once the market paints the bars and we see how the markets react around levels, then we can use them as, we're always going to use them as support and resistance going forward, but sometimes we have to make adjustments to them. And then there's always price action opportunities that occur because we don't believe markets go straight up or straight down. Consequently, we try to take advantage of those inflection points that the market creates for us. And from those inflection points, create the opportunity for us to trade and to scalp the market. Because of the volatility, and usually this varies dependent on volatility. Our stops on a normal kind of whatever in quotes day, it would be around 2 to 3 to 4 points. Right now, we're probably at the 4 to 5 point range with our stops, because we have to take into consideration the slippage that might occur around the level because of the volatility and the light volume, but the light volume and the bids and the offers, but it's heavy volume trading overall. So it's one of those things that is weird to say, but this is the world of electronic trading, that you have the volatility because you have the algorithms that are in there rotating the market at the same time. The volume's high overall, but the volume per price is very thin. So it's an oxymoron, right? But the slippage occurs because of that dynamic, and that's why we have, at this moment at least, 4 to 5 point stops in our opportunities, and also that'll be the same thing for profit targets as well. If you look at the chat box area, for those of you who might have missed the levels, the levels are imprinted in the chat box area. Those are the same levels I verbally just gave you. Like I said, we use those as a guide going forward, and we can make adjustments. Again, everything's dependent on market movement and volatility. We don't try to predict which way markets are going. All we can do is trade the markets, whatever they are at that given moment. Like I said yesterday, we're very mindful also of the fact that there are fundamental news that affect the market. Today, unemployment number came out this morning at 7:30. As you can see, the rotation here to the upside. And then also yesterday afternoon, when we warned about the Powell having a question and answer session, and was giving a speech wherever he was giving it, and that was at 11 o'clock, and that's when the rotation here to the downside occurred in the market yesterday afternoon. So we try to stay away from those situations because we don't like trading fundamental news when they are about to be released, and or obviously we definitely don't like to trade Fed stuff. F days are terrible, whether they be when they release their um, results as to what they're going to do every day, or if they release their announcements as to what they're going to do with interest rates, I should say, and or anything else. So we're swiftly coming down here to the 96 area, like we have. Again, it's a little bit of support down in here, and we like to scale into a position because of the volatility. We're not going to be perfect. Just like we have slippage at 4 or 5 points, we also have to deal with we scale in if you're trading more than one lot, obviously, as we dip down here to the 96 area, trying to get a little bit of a rotation here off of that level. Obviously, it's support, so I am buying it down there. All right, and trying to get a little bit of a push up against it, and we're getting our 3 easy points here, depending on how you scaled in. And you got a nice rotation there off of our 96 area. See if we can get a little bit more out of it. Again, you have to take some profits along. If you're trading multiple contracts, right, you got to take some profits along the way. You have to understand the momentum of the moment, that we are kind of taking some profits here. So you got to peel some profits off if you're trading multiple contracts, right? You can't just just hold on to stuff and not pretend the market's not going to rotate back down, right? I mean, at least at the moment. There are times when we try to, if you're trading multiple contracts, to be able to get out of some trades and then hold on to some others while you, try to take a little bit more than, at this point, 3 or 4 or 5 points, maybe a little bit more than that, depending on how you enter and what the volatility is at any given moment in time. Remember, we talked about the movements yesterday. If you were here late yesterday afternoon, you could have asked me for some levels. We did have 21. We had, what did I have down? I had 21 down there, and I think the low was 20 and a half. So might have been able to, if you had asked me if you were around and wanted to know some levels below the levels that we gave out yesterday morning. Hi there, JB. If you give me your contact information, like a telephone number, then Brad, who was on here before, will give you a quick call and can talk to you about what we do and how we do it, and anything else any other questions that you might have. So if you just okay, we continue to down tick here. Next level of support we have is down at the 88 area. And again, you have to take profits if you're trading multiple contracts. You have to understand what the market is doing at any given moment in time, and then respect it. This is also our blue band here. Again, if you're scaling in here, depending on how you scale in, some of you could scale in a point above and below. Some of you scale in 2 points above and below the level. It all depends on how you are scaling in. If you did do that, well, you're definitely not. If you're waiting for a half point above and below, it's kind of a little tough to do. Okay, a nice little rotation here off of our 88 area. Remember, levels I call areas because, like I said, we're not perfect, but we do scale in and scale out. But if you didn't want the 88 straight up, you got it now. See what it wants to do. Obviously here after the and just keep your stops in because of the volatility, right? I mean, we are not. There's nothing here today, especially added volatility. Markets are whipping around quite a bit, and if it's too much volatility for you and you want to just hold off and wait for a little bit, wait for the volatility to slow down, then do that. Yesterday afternoon it was pretty much wild all afternoon, so you'd have to probably not trade. But then again, we tell you not to trade in those times as well, because especially with an F day, those F days are very difficult for us to trade. They kind of live in their own world when there's an F day coming out. So as crazy as that sounds, but that's what happens here. All right, so we're trying to get a little bit of rotation here off this 88. Again, just keep your stop in no matter what. And if you didn't, if you bought them earlier and they did pop up a little bit, maybe you got out of some, maybe adjusted a entry point a little bit lower. Either way, just keep your stops in. And then next level on the downside we have is 80. As the market is coming down here again, the little bit of a sell-off here off of the once the volatility and the volume comes back in. That's usually what happens. You get your overnight reaction to whatever news comes out, and then once the traders start trading here at when the market opens up. Well, it used to be that the S&P, the big S&P pit opened up. And that's what creates more volume and volatility. And this is more traders start waiting for that 8:30 time slot to start trading. And again, you have to be in and out, especially when the volatility is here. And if this is too much for you, then I get it. Just hold off and wait for things to slow down a little bit. Yesterday, a couple of our traders they don't like the volatility, and so they just we obviously it's easy to tell you not to trade when there is. When there's the F day, when there's a Fed speak or a Fed release of some information, those are easy times to trade. I tell you not to trade because we know that there's going to be volatility. Obviously, unemployment this morning creates its own set of volatilities, especially with the fact that it's reacting to the unemployment number and reacting to yesterday's lack of enthusiasm that Powell created into the market, right? I mean, he created the rotation this week as well, or was it last week? Last week when they had the meeting in front of Congress, right? And so yesterday, obviously, didn't say what they wanted to hear, and thusly, the market is doing its own thing here. All right, so we continue to slowly downtick again. If the volatility is too great and it's moving too fast for you, and I get it because a lot of these sometimes these movements, especially early on, especially when we're talking about 4 or 5 point stops, you're getting extreme volatility that normally doesn't happen. I mean, remember, I would probably tell you that this happens. We get a normal trade 90%, 95% of the time. When we have to expand our stops and we have the volatility comes swooping into the market, that's a totally different ballgame, and that happens about 5% of the time. But then you have to pick your spots and make sure you keep your stops situated and trade them accordingly. All right. So anybody has any questions? JB, thanks for your telephone number. Also, you have ours, so somebody will reach out to you and we'll see if we can help you there. All right, we continue to downtick here. Next support level we have is down at 80. Again, how to handle volatility is to trade less, to not trade at all, to trade smaller than what you usually are accustomed to trading. There's different ways of dealing with volatility and how you trade it. And you have to make those determinations on your own as to how you are going to trade the volatility that the market presents or gives us. As we're getting this little rotation here off of our 80 level. Again, everybody trades differently and everybody has different risk tolerances. And so we respect that. And so I work with everybody on an individualized basis to try to maximize profits for them so that they can trade the right amount and not get too nervous or scared, right? I mean, half the reason that we do our trading here is so that we can take nervousness, and we have a nice rotation here off of our 80. And if you have a trailing stop or somewhere like that, you're getting a nice push here. You're getting more than 4 or 5 points here on the trade. But you have to take profits along the way. I mean, I can't stress that enough, right? So not, especially when you get that early jolt of volatility in the morning, and especially after yesterday and this morning with the unemployment number, you're going to get these ebbs and flows, the market moving very fast. So you have to take some profits along the way here when the market gives you that opportunity. All right, so nice rotation here off of our 80, coming back here to the 88. Maybe some of you did both, and you're getting out of the 88s right now. Again, everybody trades a little bit different, and hopefully you made some money on the 80s for sure. 96s, you did get a three or 2.5 point rotation there. You have to understand the initial burst, and we try to keep the 4 or 5 points for sure on the stops. But then if you get 2 or 3 point profits, you got to peel some off. Like I said, I was kind of warning you to, or asking you to, or begging you to, or whatever the phraseology is. But then if you did take a stop on the 88, you did it all right on the 80, because that's a low pretty much. And considering the volatility, you really took no heat on those 80s whatsoever. And again, all we can do is take advantage of ebbs, and we're trying to take advantage of ebbs and flows. We definitely are not trying to figure out which way the market's going. If I knew the market was going to break, I don't know, 110 points yesterday, 120 points yesterday, I would have told you, promise. I would not have kept that to myself. And if I would have told you that this morning we were going to, sell off a little bit, I would have told you too. I'm not that kind of guy. I share that information. All right, market again coming back down here. Again, we drifted down to 79, all the way down to 79.5 there. So depending on how you're scaling in, maybe you got a little bit more. You can fill up your. I got a nice rotation there off of the 80. So we have 74 the next level, and then 66 is underneath that, and then 56, 49, and 39. 56, 49, and 39 below the last level I gave you there at 66. If some of you missed our levels, we're going to print them up here in the chat box area in a second as we add in some of these new levels that we gave out. So again, below the 66, we have 74 as the next support level. Then below that, we have 66. And then we have 56, 49, and then 39. As we are bouncing here off of the 80 area, a nice little rotation there off of it. Again, if you have any left over, and there, if you look at the chat box area, there they are, the levels that we gave out this morning. All right, so the 80 worked very nicely, and this is an opportunity here if you are trading multiple contracts to be able to take more than 4 or 5 points on a trade. Again, depending on how you scale out, and this also makes up for some of those other trades that we might have you might have taken your losses on. Well, no, actually, just one, not many other trades here. So in addition to the levels, which are pretty much straightforward, we do have price action opportunities that occur, give us some more setups. We wait for the price for the market to kind of create some bars, before we try to find those price action opportunities. So once the market paints some bars and the price action opportunities occur, and then we add to our level of setups that we have on any normal kind of day. Normal is in quotes right now. We look to get about 4 to 5 trades in the course of a day. Obviously, when there's they infuse volatility into the market, the 4 or 5 trades can be 8, 9, or 10 or more, depending on how much each individual wants to trade. But we try to minimize the number of trades that you have here. We're not trying to overtrade for sure. And we're trying to make sure you pick your spots and find the ones that find the trades that recognize those trades on the charts that create opportunity for you individually, because everybody's different here. And some trades that I take, you might not take, and vice versa. So like I said, not everything here is etched in stone. Everything is adaptable to the risk tolerances that each individual has. And I work with each of us, each of you, to figure out what the maximum way to maximize profits is concerned. Peter, are you in the room this morning? And let me see, let me look. I guess I can do that myself. Yeah, Peter, how you doing? Good morning. So we're good for class later today? And Chad, if you're here, we'll have our class later today at noon Chicago time as we continue to downtick here, looking at the 74 area. Again, if that's a little bit too close for you, I get it. And you don't have to trade it, or the volatility is still there. You don't have to trade it. Got down to 75 and change here. Market's still a little bit heavy, as you can see. No, not at all. That's not. We have a lot of individuals in that price range, and that those accounts. Those are. That's what most people actually don't want to try to have, and we try to work around that those numbers so that you can. It's not embarrassing, not at all. What do you? That's absolutely not true. That's absolutely not true. Oh, nice rotation here off of our 74 area. All right. Again, I know some of you don't think this stuff works, but it does. Only trying to find these, and you gotta love the 74. I hate to tell you, right? I hate to tell you, the 74 is just it's a beautiful thing. 74. That's all I can say. Always works. Like I said, it always does. I don't know why, but that was a nice rotation there. Everybody got filled. It going right to 74, left to 73 and change, and came back up. So hopefully you got the 74s, and they got a nice, easy 5-point rotation there. JB, it's absolutely not true. It's not embarrassing whatsoever. I've worked with tons of people and all kinds, all levels. It's not. That's not true. You don't have to feel that way at all. Nowadays, because of the internet and everything, I love the 74 too. Yes, look, I turned you on. I turned you, all of you, I turned on to 74. So you're all welcome. I mean, I'm not talking about just today. Everybody's thinking, people who are here for the first time think I'm crazy saying that. But I'm talking about whatever. Okay. Anyway, yeah. So nowadays with the with the fact of that we have electronic trading, and everybody can you think they can trade, or they have the ability to log in and find these, trade. Everybody thinks they're traders, and so those account levels that are there are always they're fine, they're great. And that as long as you are, as long as you are, I mean, it's the world that we live in, that people have the ability to, log in and trade. And but the problem is that what I've found out with a lot of people who can do that is because there are a lot of people who can think that they can just flip on the screen and start trading. And unfortunately, it doesn't work. It doesn't work that way. I don't know. I mean, I wish it was that easy, right? But it's not. You have to manage risk and understand risk, and that's the thing that a lot of people, I think, miss out on. But whatever. All right, well, now we're coming down to the 66 area, which are next level down here. Again, volatility is whipping us around. You got to move really fast here, right? And this is what the trading is about here. So we just never know which way that volatility is going to take us. All right, that's a nice rotation there off of our 66, going up to the 70 area, and nice little pop off of that. Nice little trade there. Just got your quick, easy. There's another one that had no pressure. No, nice down push down to 66. Nice rotation up off of it. And remember the settlement price did help us there. Settlement price was 65.50 in case you were wondering. But a nice rotation there off of that 66 area. Again, we are not trying to figure out the markets. I wish I could tell you the markets was going down, but I didn't know it was going to happen. All we can do is try to find opportunities to trade, and that's what we're trying to do here with these levels. Again, JB, I totally understand your predicament and situation. You're not the first person that's has come to us and told us that's what happened. Unfortunately, it happens a lot in this business. By the time you come to us or you find us, you're like, oh God, what, another person who's going to want to try to teach me something. I get it. I get it. Totally understand. Again, I'm not. We just trade here. I traded in the bond pit for a long time, and made the transition here to the screen because I like trading, love trading, and had to make adjustments because the pit trading was different than here, and together with the stuff that I learned from the floor and um, the adjustment to the screen, because I realized I can't trade the same way because it's just not feasible. We put together a methodology that helps us take advantage of hopefully take advantage of volatility. And that's what we're here to do. No, I really don't trade from the beach. I am in Chicago, and we do have a beach, but they closed the beach because of COVID too, believe it or not. All right, so the 66 level worked very nicely. We gave you some levels here down below. We're trying to, market is trying to get those too as well. Crazy day today, right? Crazy. I guess they didn't like that unemployment number, huh? Well, it was out there, but you're happier today, Mark. You're talking to me. Yesterday was a little rough. All right, nice pop here off of our green band. If you are so inclined, green band sometimes works as well as our blue band. But again, it's one of those trades that you have to just take every day. You can't think about when to take them or not to. You know, HD, that it was going to be a little rough day yesterday when we talked about, Powell. It was an F day yesterday afternoon. I mean, complete whitewash, complete whitewash. It was a complete typical F day. That's all I can say. All right, if you did dip your toe there against our green band, it did okay. Let's see here. There was well, it doesn't matter. No, there was no 9 o'clock number. Just non-farm payrolls. So non-farm payrolls came out at 380. Let's see. Last couple of months haven't been great for U.S. jobs market, but many are hoping in February will turn out to be better. The first non-farm payrolls report for the Biden administration will be released this morning, and congressional Democrats rush to approve a massive economic relief package. While there are many disagreements as to how much aid the country currently needs, today's jobs report is not expected to trigger renewed debate. The Senate is going to move forward with the bill, Chuck Schumer said on Thursday. No matter how long it takes, the Senate is going to stay in session to finish the bill this week. Much like last month's release, forecasts are all over the place for this morning's job. Morgan Stanley estimated a gain of 60, while Bank of America said there was a rebound of 225. Though consensus estimates are somewhere in the 180 range. The pace is not nearly fast enough to help quickly help the world's largest economy recover from COVID, but it's still better than January's edition of 50, which, by the way, they adjusted upwards as well. They adjusted up to 150,000 for January, so that was a very nice miss. And then they also adjusted. Well, this one was 380. Again, they were on the high end. They were expecting 225, so that kind of blew away the numbers on the high end as well. So it was a very positive number, but as you can see here, that was the initial rotation to the upside, and then they just kind of just took some profits here after yesterday's big sell-off. Either, still concerns, so to speak. The U.S. remains 9.9 million jobs short of the pre-pandemic employment levels, while there's 18 million Americans are on some form of unemployment aid. Last month's jobless rate is expected to hold at 6.3, above the 50-year low of 3.5 in February of 2020. And I think, I'm trying to remember, I think that was down a little bit. But that's a number that hardly anybody looks at. So, all right, we are drifting up here again. If you maybe, again, we don't know where it's going to stop. We don't know if it's going to rally back. All we know is we bought our levels down below. If you bought our green band there, you did fantastic. Well, the next level I have on the downside is all the way down at 56. Now, because we went down to kind of 59 area there, you got to be a little bit careful around the 56 area if we go back down there and touch it. Right now, we've got resistance about the 90 to 92 area. And anything above 80, you want to be out of any, or not 80, anything above even, you want to be out of any shorts if you are looking at anything like that. And again, we're here to suggest trades, and we're here to we're trying to make sure you find the trades. And my job is not to tell you what to do or how to do it. My job is to show you the ability to recognize those trades on the screen, to find them, to understand why they might work, what you're looking for, and then you have to make the determination on your own whether you want to make that trade or not. So recognition of the trade is the first aspect of what we try to show you or teach you, and then execution is definitely the part that you have to do, and we try to give you confidence in executing those trades once you've found them and understand why they might work. And everybody sees trades differently. Everybody finds different ways to different. Everybody looks at things a little bit differently. So some trades that I find that I like, you might not, vice versa. So that's what we're trying to do here. Well done. Yeah, I think you. I can see the well, like I said, an 89 to 92 area. Yeah, 89 to 92, so we have some resistance, and anything above even 38 even, you want to be out of any shorts. All right. Right now, yeah. So when the markets expand like this, you got to give it a little bit of time for the bars are very large, very kind of risky to try to give you some little tight areas to trade. So you have to be patient a little bit and wait. You don't have to trade. We've had a lot of trades this morning. If you just traded our levels, maybe you've had just our levels, 5 trades. If you traded some price action opportunities, there were a couple more in there that I did not mention. So we're already at 6 or 7 trades, easily this morning. And it's in the first half hour. So again, remember, we average 4 to 5 trades. So that means there are days where, you might get only 2 trades that come into play, which is fine. That's okay. Nothing wrong with that. Now, you don't have to keep trading if there's no trading to keep trading. But again, that's why we always pick our spots here, and then try to make do with whatever we have. So the market is coming up to, let's say, we have a little bit of resistance here. If you're going to take it, just keep your stop in there. I mean, I'm going to tell you this is going to be perfect, but it's just one of those trades that the market. This is where we have a little bit of resistance, and it might work, it might not. All I know is that we have to keep your stop in there and try to take advantage of the opportunity if it does present itself. And if it doesn't, just take your stop and move on to the next trade. So a little resistance in this area here. See if we can turn this over a little to scalp the trade. Again, we're scalping the trade, so we're looking 2 to 3 points on these price action trades. The the levels, those are a little bit different. Those might give you a different price target as far as profit and stops are concerned. So everything's a little bit different based on what you're trading, how you're trading it. So again, anything above even, out of any shorts. Okay. All right, getting a little bit of a whoa. As soon as I said whoa, I didn't even spit it out. That's how a little goofy it is here. Oh, good. Nice trade there, Don. Is that the average now? It helped your average a little. I'm just imagining. But that was a good trade down there. Hopefully it's not that bad. But that did not hurt, I'm sure. And there was a good reason to buy him. Oh, fantastic. Great. Don is gone. 9:08. He's out of here. That's how good a day he had this morning. Way to go, Don. Gonna miss you the rest of the day. My friend from Texas is gonna be gone the rest of the day. He likes these big moves. Don loves the volatility. Oh, Mark is out of here too. Jeez, you guys. For all your whining that you guys were complaining about yesterday, everybody's gone before 10 o'clock today. Amazing. It's amazing. You guys were whining yesterday too, let me tell you. But I told you it was Fed day. I did tell you. All right, nice rotation there against this little resistance area that we had up here. Again, with 92 to 94 area, 80. It was that little area here, was a nice little area of resistance. If you did partake, we gave you an exit strategy above even. So it had to, had to expand your stops there a little bit, but let's see, got up to 94, 92, 94. So hopefully you were able to stick with it and get a nice little rotation here off of it. Good, good, Don, fantastic. You're gonna have a good weekend then. You can buy yourself a new tractor for the farm, or for the estate, I should say. Sorry. Don, you told me you were leaving now. Don't start. Just get out of it. Don't. It is Friday. Just leave. Don't want to sit there. It's okay to leave early. So it really is. You made your money. Get out of here. I'm the one that has to stay. You don't. So, I mean, unless you want to come in here and do this now, so you can stay here the whole day. I'm telling you to get out of here. How's that? All right. So that was the jobs number. Again, a lot of the growth in the jobs number was in the hospitality area. All right, so we had a little resistance up here against this 92 to 94 area, or 90 to 92 area. I got up to 94 and change, and coming back down here. Obviously, because we give you an exit strategy above even, so you had to take you expanded your stops there a little bit, and you're getting paid off here very nicely. Fed Chair Jay Powell vowed to keep monetary policy steady on Thursday, even as the economy improves from the pandemic and inflation begins to rise. The remark echoed his comments he made in Capitol Hill last week, as well as a similar stance he's taken during much of the coronavirus crisis. A sell-off in equities still ensued as the benchmark 10-year yield jumped 7 basis points to 7.55, and that's the biggest problem we have right now, the highest level since mid-February of last year. What happened? Powell didn't say anything different. The market's focused on what he did not say, as the backdrop for financial markets have changed quite drastically since he last made a public appearance. Quite drastically? That's what they say. That's what it says. Financial markets changed quite drastically. I don't know about that. All right, so we did go up there to our resistance area, and now it's trading back down here. A next solid level that I have would probably be at the 56, maybe adjusted just a little bit down to 55 or 54, but then we have 49 underneath. So kind of see what happens there. The Treasury yields have spiked along with a broader rise in borrowing costs. The big concern is that these moves could be destabilizing. Powell did say that if things get disorderly, the Fed has the tools to deal with them, but investors were likely looking for something that was more specific. Others are flagging comments he made about pressure on prices, even if the economy sees transitory increase in inflation. I expect that we will be patient. Our market continues to downtick here. Again, old levels, once we get triggered there, we don't use them anymore. Uh, 21. Yeah. And 30. Okay. Well, we're close. I do have 07, so I do also have 07. They're done. He added but that he had many investors getting nervous. The market translations of patience is that patient doesn't mean never. Duh. And that Powell's indicating that easy money will, at a certain point, come to an end. Oh, did they just figure that out? And that's why the market sold off, was that he said he's going to be patient. He's been saying he's going to be patient forever, but yesterday they said, oh, patient doesn't mean forever. You gotta love these guys. You do. You gotta really love them. Hey, JB, we're trying to. Are you still here, JB? We go down to our settlement price there. JB, are you still in the room? So if you are, we are trying to give you a call. And so, just in case, I'll let you know. All right, so let's see. So I guess patient doesn't mean never. That's what they just figured out yesterday. That's a good one. I gotta love these analysts. The Senate is also moving forward on Biden's mega stimulus proposal. Investors have been pricing in this package for some time, and more clearly since Democrats won both Senate seats in Georgia, which gave them full control of government spending powers. The $1.7 trillion price tag for the bill, along with trillions of in stimulus released in 2020, is really what's behind the surge in inflation expectation, as well as the backup in Treasury yields. How long will the sell-off continue without specific measures from the Fed is the question mark. All right, so again, chopping around here a little bit. Of course, with markets going down, any trend you see, that's a good one. Right now, it's just moving all over the place, which is fine. We don't have to find a trend. All we have to try to find some levels where we can jump in. Tough to say. You're going down, and then you get a rotation of 40 points, 35 points. Kind of ruins your trend, right? What is your stop? 10 points, 20 points, 15 points. You're breaking down, and all of a sudden you get a rotation of 35 points. So it's tough to find levels. It's tough to say that there's a trend here, or to trade a trend. You can trade it for a little bit. Maybe if you were able to sell it off the morning and trade that, even then you have to, come down and cover it someplace. So Overnight trade is more calm and trendy. Well, overnight trade is also very thin, and it's manipulated very easily. You could say it's calm, but I mean, just because we've been trading with some volatility over the last few days doesn't mean it's not common here. Right now, the market is just trying to find a consolidated level to incorporate the fears that of rising rates and what it means and how we are adjusting to it. So the volatility that you're seeing during the day is welcome. I mean, for traders, that's what you're looking for. You just have to make sure you pick your spots and to keep your stops in, and to be able to wait for the opportunities when it presents themselves. So, it does get it. Believe me, it gets common here too. And when it gets common here, like I said, we average 4 or 5 trades during the course of a day. Lately, we've been averaging more, which is a welcome thing because we like opportunities to trade versus standing around or sitting on our hands all day. So yeah, I mean, yeah, sure, it's calmer, but it doesn't mean that it's also tougher to trade for sure. But that's okay. You just have to wait for the opportunities here to trade when they present themselves. So. Okay, they dip down to that settlement price is holding the market up here very nicely. If you're trading a settlement price here a couple of times, you're doing okay with it. Thanks there, Don. Anybody have any questions? Make sure you put them in the chat box area. I definitely don't mind questions. I would definitely have to. I do like the fact that we are trading and we are focusing on that. But obviously, sometimes I am more focused on that. I don't explain some of the things that we're doing here. So please, if you have any questions, some of the new folks that are here, anything about what we do, how we do things, please feel free to put them in the chat box areas. That's where I have that window up and able to see those questions faster in that area instead of the Q&A section. So any questions, feel free to ask. I do like questions. I have no problem answering questions. But make sure you put them in the chat box area. Market again, we had resistance up there around the 90 to 92 area, got up to 95 and came all the way back down here. Maybe some of you were able to take advantage of that. That's again being patient and waiting for the rotation, even though it was some 30 points off of the low there. But that's what, that's, we try to, like, we don't know that it's going to go up there, but we just, that was some good resistance as far as what the market was telling us. So that's where we thought that we would have some resistance. And I did tell you that anything above 38 even, you probably don't want to be short anymore. So if we get back up there, that still remains the case. All right, you can see here it's tipped down to 65 and we're up here almost at 80. Crazy, right? Crazy moves. But that's what's going on here. It's very tough to try to sit there and say, "Oh, I'm going to buy these and watch it go up 15 points." So this area right now that the market is drifting back and forth in, what I like to call the no trade zone. I know it seems like you want to take advantage of it somehow, some way, but you'd be guessing here as to if it's going to rotate or not. So keep that in mind if you're trading. It's very tough to sit there and say that this, if you're trading the range, you're trading a very big range, but then also if you're going to trade it, you have to know where your exit strategies are, even with this range trade. So as long as you keep that in mind, then you can trade this range trade. Otherwise, just be patient and wait for the opportunities. Like I said, we've had very easily 7, 6, 7, 8 opportunities this morning, and it's not even in an hour. So it's not like we haven't had chances to trade. And this range trade here is fine as long as you understand that if it busts through the range, that you have to either exit and keep your stop in if it expands those range. And, some people like to trade the range, but it's a little risky, especially the time you decide to get in is usually the time that it decides to bust out of the range, right? So who knows? Maybe I'm wrong, but as long as you understand the risk, it's okay to go ahead and to trade it. But again, knowing where your exit strategy is very important if you're going to trade the range. All right, well, we're coming down here again to the settlement price. So again, if you're going to trade it, keep your stop in. All right. If you're going to trade this little range game, keep your stop in. Well, that's crazy. Crazy, right? Just nuts. Whipping around all over the place. But again, like I said, we gotta be patient. Downside support is down at 50. At 56, I'd probably do around 55 to 54, somewhere in that range. Again, very tough to trade the range. I keep saying that. It's not that easy. Okay, continue down tick here. Support down at, like I said, the 56 area. And get down to 57 and change. So be careful here if you are scaling in around this area. Okay, depending on how you're scaling in, maybe you're in already. I don't know. Oh, great, Tim. Another person out of here. Fantastic. I really like to hear that. I really do. All you guys are leaving. Okay, I'll stay and trade for you guys. Thanks. Appreciate it. You guys are the best. Everybody's leaving me here today. Yeah, you gonna hang out with Don? You gonna send the jet to pick you up? Go play some rounds of golf with him? Or actually, maybe you could teach him how to play. I don't think that. I don't think that plays. All right, we got down to the 56 area here. If you are dipping your toe into it, got there 6.5. So obviously, scaling in is important around the level like we talk about. So obviously 57 probably would be a good entry point there, and a nice rotation here off of that. Don, you don't want to come up here and stay with me. It's way too cold for you. I would rather go and hang out with Mark in California. I'm sure he'll give you a guest house. Why would you want to come to Chicago? It's too cold right now. Oh, it is going to be warmer this weekend. It's Monday, but you don't want to come and hang out with me. Trust me. Oh, there you go. It's like 12 right now, 13 or 14 degrees. It's going to get warmer. It's going to get to 40. And then on Monday, Tuesday, it's in the 60s. So short weather. We're going to wear our shorts this week. All right, so we dipped down there to our 56 area. Remember, we probably got filled down there. So you're not taking it now. If you didn't get filled at 56, obviously, then you definitely are not. You don't want to take it. If it's a lot more riskier, like I said, maybe make the adjustment a little bit lower, down to 55 or so. But you still got a nice rotation there off of the 56. Either way, so that's a nice little trade there if you stuck with it. Wish I could tell you that was going to happen. Hopefully, some of you stayed with it. You can be in the 70s there. Well, definitely Mark might come out there. Check it out. 70s in Texas, Mark. What do you know? Mark's going to the beach with his fur slippers. Everybody's leaving me. It's so sad. It's all right. I really like the fact that you guys are getting out of here. It's going to be 82 in Malibu. That's what Mark says. So it's definitely going to be nicer there. Don, I think you should take the jet, go out to California. Don said it's too hot for him. 82. It's not as. All right, we had a nice rotation there off of the 56. That was our level. I suggested maybe a little lower, but if you stayed with it, it got right down to 55, 75. So the 56 worked exceptionally nicely here. Again, if you were more risk averse, maybe you adjusted just a little bit. If you stayed with it, then you obviously did fantastic. So our levels again are working out. If you just use those, that's what that's what we're here to do. And if you don't use any other information, just our levels, obviously I think it would have been okay doing trading those today. But again, we did have a little sale there against the 94 area. 92 area. And we gave you an exit strategy above 38 even. That still stays. I mean, if we get above, if we start rotating back up to the upside and we get above 38 even, I think we go and push our upper levels up there, believe it or not. As crazy as that might sound, but all right, we're definitely whipping around here a little bit. So next level on the downside we have is down at the 49 area. If you look at the chat box area, the levels are imprinted there for you in case you missed them or want to have them to look at them. Those are the levels that we're going to use for the rest of the day. We got, let me give you a couple more here, 49, 39, and then we've got 31, 21, 14, and 07. In case we really decide to give this up here. So below 39, we got 31, 21, 14, and 07. So we never know which way these markets are going to go, right? There they are. There they are. All right. Who knew? Who knows, right? But all we can do is trade the opportunities when they give it to us. And today they are giving it to us. And a lot of our traders did okay this morning, so they are out of here. And nothing wrong with banking your money and saying thank you. And we'll see you on Monday, right? That's what we do here. I like it when they all leave early. Trust me. We focus more on the morning hours anyway, so that's not. That's what we try to do here. We're focused. We get more, better ebbs and flows in the morning hours than we do later in the afternoon. Obviously, when there's news that comes out. All right, Mark, you take care. Have a good weekend. Obviously, when there's news that comes out, like yesterday, we try to warn you that there's going to be some fundamentals, or in yesterday's case, Fed governor, Fed chairman, talking, and he obviously, when people listen or they interpret what he's saying or doesn't say, in this case, right? That's what they said. He didn't say. He said, but he didn't, or he said it without saying it. That's what you get. You get volatility. He's saying it without saying it, and all of a sudden, the markets react in a goofy sort of way. So next level on the downside we have is down at the 49 area. So we have 40. You can see in the chat box area there. Those are the levels that we're gonna kind of use. I don't know. We might go through them all. Who knows? We don't know. So next level down is 49. Again, just keep your stops in no matter what. We've been lucky that the beginning part of the day, because of increased volatility right off the first couple bars, and it's always been the case. The first couple of bars get a little bit more crazier to trade, tougher to trade, because you're getting a lot more people starting to trade. They're reacting to the overnight trade. They're either accepting it or not. They're not accepting it, and you're getting this influx of volatility the first couple bars in the morning. So that's what happens there. But then after that, it's been a nice steady here push to the downside, and our levels have worked exceptionally nice. With also our bands have worked very nicely as well. If you looked earlier, their blue band in the hourly was right there as well, which shows that 61 area. All right, we went down. We have next support level we have is 49. Did I say 59? I don't know. 49, and it got down to 50 and change there. Rotated back up here. Very, very choppy. Again, it's choppy like this. You have to, you just gotta patient and wait. Find a good entry point. Right now, resistance would be at around the 82 to 83 area. Okay, we're chopping around here a little bit. Again, be patient and wait. It's hard to figure out where these things go and where they're going to stop and how you're going to, that's, just because the numbers are flicking on the screen doesn't mean you have to trade them. All right. Sometimes it is cheaper to turn off the machines, right? Absolutely. Hey, that's why we talk about picking your spots, right? You know, you try to get too cute here and trade in the middle or someplace that you shouldn't be trading, and then you get caught. And these moves are vicious. They're volatile. They're quick. They're crazy. So the best thing to do is just to be patient and wait. It's hard enough to trade them around an area that we think will work, let alone areas that are just chopping around and have no idea what it's going to do, which is what it's doing right now. So yeah, obviously sometimes it's either better to turn the machines off or wait for the opportunities and be patient. So somewhere between turning the machines off and being patient is what we're trying to do here. And again, the opportunities that we're waiting for are, you know, at least we know that they've worked for us in the past, and we feel confident in trading them. Right? That's what that's what we're trying to do here, is give you confidence and putting in your trades. Because you're right, it does get a little tricky sometimes. You get these quick moves here. I like the analogy. All right. So resistance right now would be around the 82 area. Support down at the 49 area. And kind of in the middle here, just let it be. Anybody have any comments or questions? Feel free to put them in the chat box area. It's choppy, but again, no, we talked about waiting for the opportunities. You could easily get caught in this chop. Otherwise, that's why we stay out of it. It does require, I mean, the tendency is to want to jump in and trade because you see it moving around. But if you can exercise some patience and wait for the opportunities to present themselves, I think it would be all better. It'd be better, you know, that's what we're trying to do here is make money at the end of the day. So, all right, look at this move up here, right? Who knew? So resistance we have around the 82 area. So as soon as you think there's a range, there isn't a range, right? So that's why we just stay away from that mess. Yes, that's a 200 day average. For the 5 minute, right? Well, HD these days, there is no exactly, unfortunately, you know, because of the volatility. So it's around. So 80, 81, 82, 83 in their range. And that's just the best we could do considering the volatility. The volatility. Now, if you just want to pick one spot, and that's what you're, you know, looking for, then just pick the one spot. You know, just pick a spot, and you know, whether it gets there or not, it doesn't matter. At least you know you got in for a reason. You know, whether the market decided to go up there the rest of the way for you or not is what it is. You don't have to get upset about it if it doesn't get there, um, and you missed out on it. You know, so it's okay. Basically, is what I'm saying. If you don't get it. But these days with the movement and volatility, you got to give yourself some space here. That's why we talk about 4 or 5 point stops at least, just because of the slippage. I love that word, but I guess it does make sense. All right, choppiness continues here. Well, as soon as you think it's going one way, it reverses, goes the other. Not a surprise these days. Not, well, today anyway. Just stay focused and wait for the market to give us those opportunities. Look at downside support is down at the next level we have is 49. Yeah. Very, very choppy. It's hard sometimes not to do anything, right? I mean, that's what we're here to trade, but then when the market does this, it doesn't. Yeah, I do obviously have market orders in there. Obviously, I don't wait for the level. I mean, to go down to a level and then watch it go down. It moves so fast that if I don't have the orders in there, they'll disappear. I mean, I'll miss it. Is what I'm trying to say. So yes, I do use market orders. They're in there, and like my upside right now would be, like I said, around the 82 area, and downside here would be around this 49 area. And around means scaling in around. So whether it be 1 point, 1.5, whatever it is that makes you comfortable. When it's quote unquote normal trade, whatever that means. We do about a half a point above and below. And that keeps us in the game when it's very quiet and slow. These days, because of this added volatility in here, we're probably have to make adjustments to a point and a half above and below a level, just because. Just because we're not perfect, right? It's really that simple. I would like to say we're perfect, but I just can't say that we're perfect. So we got down here to 50. Again, if you did maybe scale in there a little bit against 49, maybe you were able to get some, or if you scaled in differently, 50 and a half, it did, and I get a nice rotation off of it. Again, depending on how you scaled in, everybody, like I said, I keep saying this because it's not, there's nothing etched in stone here. Everybody trades a little differently, and I get it. And I respect that. All right, so we did popped here up against our 50 area. We had 49. So again, depending on if you scale in any differently or if you did scale in there at all, be a little bit careful there around the 49 now. Just maybe adjust a little bit. All right, there, HD. Hopefully it was a profitable one. All right, then don't worry about it then. As long as you made money and that's it, you're good to go. This is always Monday. Look, you just trade what makes you comfortable, right? You know you're gonna get trades when it's the market that you like. If this is a little bit too whippy, then just that's fine. And you don't have to trade it. You have to trade what's comfortable for you. And obviously, if this is not comfortable, you don't have to sit there and force the issue. I mean, look, the deal here is they have to keep your stops in, uh, and then handle the rotations, especially not the rotations, but so much the slippage. That's the hard part. All right, again, we warned you a little bit there against the 49 because of the way it traded there at 50. Obviously, you have to respect the fact that we did go down to 50 and bounced off of it. So the 49 became a little bit more tenuous than it was initially. And you have to make adjustments. I suggested maybe 48, 47 instead. And again, there's nothing wrong with making a little bit of an adjustment based on the price action prior to it. And if it's some people don't put the trade on at all because basically the level got triggered when it got down to 50 and bounced up. So we always are using the level one time. And if you didn't get in and you were still looking for 49, obviously it's not the way the volatility is right now. It's 49 is just not going to hold. Maybe, like I said, you have to adjust a little bit lower because we do have secondary support or resistance levels above or below the levels that I give out. So that kind of justifies making the adjustment. I just don't tell you to make the adjustment because there's a reason for it. So if you did, maybe you got in a little bit better. Maybe you're working 47. You did pop up to 50 there. You're getting some rotations off of these opportunities. You're moving fast, that's for sure. No doubt about the volatility here. You gotta be quick on your toes here. I mean, that's about all I can say. It's got to be a little quick on your toes and obviously have your orders in place, whatever your price targets are going to be. Yeah, you definitely 20 seconds, whatever it is, that you get those quick moves, right? So again, if you did make the adjustment, hopefully you did. You got a nice rotation off of it and a quick little profit. And so again, we have 39 is the next level. I'll just give you the levels below here, just in case you didn't see them printed in. We've got 39, 31, 21, 14, and 07. Yeah. In case you didn't have them in there. Welcome to volatility. And again, you made the adjustment down here for a reason. We we suggested a little adjustment because of the price action just prior to it. And hopefully you got in a little bit better price and were able to take a quick little scalp. As we're getting here, a nice little rotation there. If you got in at 47, you got a very nice trade there with minimal amount of pressure. Again, these are the type of things that we try to illustrate and show you and try to tell you, why you would have to make that adjustment. It's just not, I just don't make it up. There's a reason. And again, anything that I talk about is a taught experience. We try to show you, teach you what we're trying to find here. As a matter of fact, we're going to have a class later on today and talk about, kind of go over the day, and we like to use live charts to show and discuss the opportunities that we had, where we got our levels from, how we find them, what we're trying to do when we get them, how we adjust them, what we're looking for on rotations. All these things come into play when we are doing our work in our class, which again is going to be later on this afternoon in this venue using live charts. I'm going to take a little bit of a break here. Again, if you have any questions, it's a good time to ask right now. Next level on the downside we have is the 39 area. Yeah, we did make an adjustment here just a little bit against the 49. So even if you didn't make the adjustment, you didn't get stopped out. And you got a nice rotation here off of that level. All right. All right, you're done for day two. Everybody's happy today. Very good. I like to hear that. Okay, next downside support is down at 39. All right, we're going to take a, yeah, I don't blame you. And you can lose your profits very fast here, no matter what. So if you bank some money and you're happy with your day, we definitely, think that's a good time to say, okay, we'll see you on Monday. Nothing wrong with that at all. All right. As soon as you think things are going to slow down a little bit, this is no slowdown today. Thing is, we're not even. I guess we opened up a lot higher, so it seems like we're completely, uh, had a very. We're only down 20 S&P points, considering how bad the this move is. But we opened up a lot higher due to the unemployment number, but obviously they did not like it anymore. All right, and now we'll take a little bit of a break. Next level, again, he had the lowest book from low. We have 39, 31, 21, 14, and an 07. Back here in a bit.
Hey, quick shout out to Leland. Hey, Leland, I just put a link in there for you. So if you want to click on it, you can join us in Zoom and then ask your question. That's for Leland K. So let me know if you got the link, Leland. and welcome. Anybody else joining us from the outside, check for the link. Join us on the inside in Zoom. Hey, Chad S. Hey, Chad, welcome. Hey, Chad, just let us know if you want any information on Sol's Monthly. Just raise your hand and I'll send it out to you. I'm going to send it out in chat, in Zoom. Is it Uleti? Ioleti? C, welcome. Same. Just raise your hand if you want me to send out some information on Sol's Monthly. It's got it going at a special rate. Just let me know if you're interested. Ramona the same. Ramona H. Hey, Leland, you made it. Good job. That's excellent. I'm glad that actually worked out. That's a good transition. So Leland, welcome aboard. Quick sound check. There you go. And I'll answer your question. Saul couldn't see it. So I was just trying to relate it, make sure that you came in, and then I can certainly answer your question. Trays are the same. Just let us know if you want any information about Sol's Monthly. It's at a great discounted rate. Just raise your hand and let us know. So this is price action trading. Price action trading has been around for a very long time. It's where the rubber meets the road at the price change, the action of price movement. In this case, it's the action of price movement around various particular levels or zones. So what I should do is give you a quick background on Sol and why individuals pay attention to what he has to say and how he trades and the individual that they like to learn from, based on being part of the service. There's three levels of the service. One is a guest, which you've joined. Thank you. The next is to sign up for Sol's Monthly, which is a nominal fee. Really just separates people, those that I guess are more interested than others. I guess that's the way to put it. It's a nominal rate. I think on the internet you have to do those type of things. The and then Sol has his intensive where he takes individuals under his wing and teaches them like, a pro golf instructor, a well sought after pro golf instructor that takes you under his wing and teaches you the nuance of the game and how to throw points up on the board. And that's really what this is about. It's about learning a price action trading technique and then utilizing Sol's proprietary trading zones as the areas of interest. And then based on market activity, price change, whether you put a trade on, a short trade or a long trade, a fade trade or momentum trade. And that's really the ticket when it comes to this opportunity. If you have areas of interest and you have market action in those areas or around those areas of interest, what trades do you put on? Why do you put them on? And why don't you put them on? So that's the method. So the method is price action. The individual Sol's been doing this for 25 years or so. He's a CME Group floor member. He's currently actively trading for his own trading account. So that sets him apart from a lot of these people or other people. I don't even like to mention them. Uh, and that's what is done here on a daily basis based on market action. And you can see today's market action versus yesterday's market action versus the day before's market action. Monday's market action will be different. We also focus on the morning session. We start here at 9 a.m. Excuse me. We start here at 9 a.m. We open up, we connect, individuals connect from all over the globe. It's a very tight, responsive group. Saul puts up his charts. It's a series of 3 charts based on time frames, 5 minute, 1 hour, and there's a 30-year bond chart that he puts in there. And that 30-year bond chart has been a telltale based on what's happening in the market. Saul started in the bond market a long time ago when he couldn't shoehorn another person into the trading pits. He survived and excelled, in my opinion, against the best traders in the world based on their craft. And he is showcasing that here on a daily basis based on his temperament, his ability to communicate, the fact that he's trading, and the adjustment based on price movement and activity and his levels. Hey, Anupam, how are you doing? Nice to see you. Yolette, let me know if I'm pronouncing that correctly. Hey, Greg, nice to see you. Hey, Jay, not JB, but regular Jay. Hey, Jay, did you sign up for Saul's monthly yet? Just let me know in chat back. If I don't hear from people, I just disconnect them. I don't want to do that. I try to give them a chance because they may not be in front of their computer. I just want to make sure everybody's playing ball. Hey, Ramona, welcome. Roop, I don't know if I saw you before. Teresa, let me know how you're making out. If you need any additional information. Hey, Warren. Kurt, I think you snuck in there. KG. And Dove, again, wishing you well. There's a lot of stuff going out there based on COVID. I did get my vaccine. I got the Moderna one. They say that after a week, your arm blows up. I haven't had the blow up yet, but it's only been, when did I get it? I got it on Monday. So I guess I'm getting pretty close to a week. Felt terrible. It was all, so I had COVID. I had to get remdesivir to survive it. I did get it. I was very lucky. When I got the Moderna shot, I had almost every symptom except for the lung problems and the cough and the fever part, but had all the other associated symptoms, you know, chills, crazy like head noises, like stuff like crazy swishing noises or cricket noises in my head, body aches, crazy body aches, shooting pains, all sorts of crazy stuff. Headache, terrible headache, migraine-ish type headache. But it seems to be fading now as we come into the end of the week. But it was crazy. And then I'm sort of dreading the second one, but I guess it's a blessing that I was able to get it. And the only reason I was able to get it is because my other crazy medical conditions. But try to keep trying to get the shot because I don't know what the end game is based on all the stuff that happens after the shot, 5 years out or whatever the deal is, but we shall see. And actually, my kids pressured me in to get it. Hey, Vikram, welcome back. Yeah, that's actually funny. Vikram, I hit the wrong button. I promoted you panelist. So if you saw the switch, I switched you back. So if you saw that, no worries, you're back in action now. And Vikram, do you sign up for Sol's Monthly? I thought you did. Just let me know back in chat. Use the chat feature to respond. So anybody, we had a few people raise their hand. I sent out the info. If anybody else wants to do that, don't hesitate. Get in the game here. Leland, you raised your hand. Okay. Beautiful. So I'm going to send you out the discounted opportunity because you took action. Chad S. Let me know what you're thinking about doing. Yulete, let me know what you're doing. Ramona, let me know. And Teresa, let me know. It's nominal. You get to come and go as you please. Shows that you care. And God knows if you didn't get your money's worth today, and that's just today. Hey, Leela, I sent it out to you. I'm just going to put your hand down, but thank you very much. Again, those that are joining us on the outside, join us on the inside. I did send out the link to pop in. The temperature in New York is still a little chilly, but next week it's going up into the 70s. Now, as we go forward from, over the weekend into next week, those temperatures have been coming down a little bit because I thought we'd be a little bit higher today. But the light is at the end of the tunnel. And I think that's good news just about everywhere. It's nice to have spring upon us. And Leland, let me know if you do that because I authorize people that get the discount to roll over at the discount. So instead of $379, it's $100. So let's say you decided you liked it, you wanted to stay, you just leave it alone. If you decide that you want to move on or whatever happens, you can cancel it right with this for everybody. You can cancel it right with PayPal. PayPal is great for that. We don't get involved. PayPal takes care of everything. You have control, but I do authorize you for the rollover. Rolls over at 100 if you so choose. It does not rise up to 379 if you get that rate. So I think it's important for Jay to think about that. And Leland, you are more than welcome. You are a guest. Just make sure that when you're ready, ask for the link because that's the only link that works for the discounted rate. And we do get people that come back regularly. They love to get Sol's levels, his zones, if you will. And then they hit the skids, they beat it. So we always have we always have the eyeball on them. We have individuals that come in and don't respond and just hang. There's all sorts. And then we've got a great group that have joined Sol's family, and he does appreciate it. And the nominal rate is really just out of respect. I mean, God knows that having the capital to trade is significant, and the opportunity in trading is significant, but also the chances of losing money trading. So if you can help bridge that gap between losing and winning, what's that worth? I don't know. That's up for you to decide, or up to you to decide. But anyway, I'll be in the background. Chavez, let me know what you're doing. Let me know what you're doing. I'm not saying it improperly. Leland, thanks you for coming in. JB, nice talking to you on the phone. Jay, let me know what you're doing. And Ramona, let me know what you're doing. I mentioned Teresa, right? Yeah, I did. Okay. So Leland, just to make a little of adjustment, the charts, right? Yes. The levels are proprietary to Sol based on how he lays them out. I'm sure there's some of that in there, as far as support and resistance. I think you should spend a few days getting Sol's levels. And what I'll do is I'll give you Sol's levels now so you have them as a reference to what happened today. And Jay, let me know if you're back. Just the letter J. All right, so today the pivot was 3807, 3807. So that's Sol's pivot. These are his zones to pay attention to based on his price action trading methodology. So the pivot was 3807. He had support at 3796, 88, 80, 74, 66, 56, 49, and 39. He had resistance at 17, 26, 34, 42, and 53. So, from a trading advantage point of view, for his own trading, Sol sets those levels for himself and he loads them into his software as opportunity areas for his own trading. Now, in his intensive, he teaches individuals how to set those levels and then works on the nuances of the trade, entries, exits, and stops in and around those levels. In this service, On a monthly basis, there is a opportunity for traders to receive Sol's levels in audio, and then they're reset and put out into his chat. Those are the areas that he is looking at in his own trading, and he gives them out to individuals as part of his service, these zones and these areas, and individuals are very happy to pay for them. So he has traders out there that have been trading for a long time that are either part of Sol's past intensive classes or individuals that were on the trading floor or individuals in the know that just want to pay him to give them his levels. And they come in on a daily basis to receive them and they pay for that right. The other opportunity in his monthly is his commentary and interaction with individuals like yourself as you ask him questions and interact based on the trade, the activity that's happening based on the reality of the cash open and what happens during the price movement, price action, right? Of the morning session. So the focus here is the 9 a.m. open, the Zoom room, pretty close to 9:30 bell. Sol goes to his screens and sets the levels, comes in and gives them out to everybody. Go through the morning session with Sol based on price action activity, and you can pick up pretty quickly on what goes on here. And that's, another opportunity for you. Yeah, well, the nuances are how to be on the right side of a given move based on Sol's zones. Whether to do a trade or not is very important. And how to identify that for yourself. Where to place your stop and why based on a particular trading day and how the personality of the market is setting up based on volatility and momentum. That's really a big deal. How do you get better based on your selection of those opportunities based on areas of interest? And Saul lays it out for himself and he gives you that opportunity. So the fee structure is very nominal because it gives you a chance to join the family and it also gives you a chance to come and go as you please. And it also tells us or Saul that you're real, that you've actually done something in an effort to stay here and also done something for your effort to be or look to be a better trader. And believe me, there are people that just want to seek out as much free stuff as they can. And I hate to say it, is they get their heads spun. Some people like to get their heads spun, some people don't. There's an awful lot of information out there coming from an awful bunch of crazy people. And I say that with a smile on my face. And I think a lot of them are coming back out of the woodwork. What's the difference between Saul and a lot of those people? Just spend a little time and listen to them. You have to make up your own mind if this is something for you. I find that, you know, providing people with the opportunity, those people pick up on it pretty quickly, the difference. And you don't really have to ask them too many times. They join, they hang out, they renew. They are. And we get them in here. There's been a lot of movement based on individuals showing up here and acting like crackpots. There's some of that goes on too. So the more Saul's name gets out there based on the various touch points, the more they show up. And a lot of them are so jaded that they just can't get out of their own way. But that's part of it. We understand it. That's why we never make any pronouncements about whether you make any money or not. There is nobody here pounding you're going to make X, you're going to make Y, you're going to make X and Y and X. Just pony up and drink the elixir. He doesn't do that. I might get a little crazy, right? When I ask Jay to let me know where he is and that type of thing. But anyway, so I'll be in the background. Saul is on his break. He'll be popping in and out as necessary. The zone is the morning session. If you made money, great. If you didn't make money, let us know. You got some work to do, and we'll be glad to help you with that. And the people that are joining us on the outside, I'll post that link again. If you're new, join us on the inside, and thank you.